Hey guys, welcome back to this YouTube channel. It's finally the month of July and we're going to take a look at what happened in the Calgary real estate market in June. Things have changed, things are shifting. As we enter the summer market, we are seeing some dynamics move, and depending on where you are in the market, whether you're looking to buy or sell, things could be different for you. So in the month of June, sales actually dropped along with new listings while inventory ticked up. And while this might normally signal a more balanced market, it's not necessarily the case depending on what you are looking to get into for the Calgary real estate market. Because all the inventory that we actually got onto the market have mostly been, unfortunately, in the unaffordable parts of the market. So everything above 700,000 for detached and so on. And so therefore, if you're trying to enter the Calgary real estate market looking for a more affordable option, then things might still be pretty tight and challenging for you, depending again on which parts of the market you're looking to get into. Before we get started, hey guys, it's Iyer, your Calgary Realtor, and thanks again for tuning in every single month for updates and data on exactly what's happening in the Calgary real estate market. Now, if this is your first time, welcome, and I hope you subscribe and find value in this video. Without further ado, let's go and see what's happened in the Calgary real estate market. So taking a look at the summary by the Calgary Real Estate Board as far as June goes, sales in June reached 2,738, marking a 13% decline from last year's record high. Sales improved from home prices above 700,000. However, it was not enough to offset the declines we reported in the lower price ranges, so 17% higher than longer term trends. Inventory in the lower price ranges of each property type continues to fall, providing limited choices for potential purchasers looking to more affordable products. It also continues to be more of a competitive market for some buyers, with over 40% of the homes selling over list price. So obviously it's still extremely competitive. I'm still seeing a lot of unconditional offers and a lot of people paying above list price in order to secure that property, because when you miss out on one, you're then paying higher for the next one that comes on the market. New listings also ease relative to sales, causing the sales to new listings ratio to remain elevated at 72%. There's a persistently tight conditions that drove further price gains this month. So overall, even though we are seeing an increase in inventory, but as far as the more affordable parts of the market go, things that are, say, sub 700,000 for detached, for example, are seeing still significant price gains just because of the high level of competition to try and get into those properties. And as we know, Calgary the narrative has been all about affordable properties over the last 2 to 3 years, and that's what's driven a lot of people. And as far as an analysis went over the past 3 months, in every single market report, I've pointed out this fact that there is a decision point where buyers are going to reach where it doesn't make sense for them anymore to make that move or to change provinces, because then in that price point, even though they can maybe get a lesser product, but then they can just stay where they are and they can be comfortable because their family, their friends are all there. And so once the pros and cons of moving together with the price ranges reaches that decision point, I feel like you are going to see lesser and lesser buyers come on the market. Now, we will continue to see price gains on the lower side of the market, just because that still serves a lot of the buyers that still want to make that move. And the other problem we are facing is overall, based on where the properties were last year, they were a lot more affordable than this year. So even though we get more properties coming on the market, they're just not going to be in that affordable range. And I'm going to make a video about that because there's always this expectation of, hey, we are not seeing affordable properties come on. But the question is, will we ever? So now moving on to the benchmark price to see how things have shifted for this month. As far as the total residential benchmark price goes, we hit 608,000. That was a $2,700 increase month over month. As far as the detached price goes, we reached 767,600, which is a $5,800 increase month over month. The semi-detached price went to 686,100. So that's an $8,000 increase month over month. The townhouses now are approaching 464,600. That's a $2,100 increase. I still very clearly remember the time we crossed 400, and I can't believe how quickly we have reached 464. To think for a townhouse in Calgary, it's become that expensive. And as far as apartment prices go, we are now at 344,700, an increase of 4,200. So as you can see, there's a lot of gains in that affordable part of the market, and we just continue to trend up. Semi-detached, there's a serious lack of inventory, so obviously there's a lot of pressure to then push that price up, and then detached after that. Now taking a look at the benchmark price across different regions across Calgary. So if you look at North, 580,800, so that's an $8,000 increase month over month. 529 in the Northeast, 445 in East. Southeast is at 597. South is at 596. City Center is at 614. West is at 739. That's a $12,500 increase month over month. And as far as Northwest goes, 664,000. So gains remain actually pretty slow across the city, with the highest gains we are seeing in North and West. The month-over-month gains will continue to increase just at a slow pace than we have seen before. So the first half of the year, the first quarter, we were seeing significant gains across the board. A lot of the times, 3 months in a row, $15,000 plus increase in any given region. But now we are even seeing negatives in certain regions. Of course, this varies from month to month, so it does not necessarily signify a trend, but it clearly gives you an idea that certain parts are hitting a more balanced market, depending on how affordable or how expensive the properties are in those regions. So depending on where you'd be looking for to either buy or sell, your story could be quite different. So going back to that point of sales, so obviously you can see we dropped by 354 as far as month over month goes. As far as the new listings goes, we actually dropped by 535. So that still allowed our inventory to increase by 385 month over month. And as far as year over year, we are 9.2% above than last year. As far as the months of supply go, we saw a significant increase in months of supply. Now, again, this doesn't paint the whole story because this is a generalized number. So even though we are sitting at 1.38, which is still a very, very strong seller's market, but it was a significant increase from last month, which was 1.1. Now taking a look at the summaries by the Calgary Real Estate Board for each property type, and feel free to pause and read this in more detail, but I'll go over the highlights. Gains in high-priced detached homes were not enough to offset the pullbacks, price below 700,000. And so this leads to a 16% year-over-year sales drop. Following several months of gain, new listings eased this month. 1,775 detached homes in inventory, an improvement over last year, but we are still 45% below the longer-term trends as far as detached homes go. We are starting to see better supply and demand balances in the upper price. So that's where I was saying, if you're looking for properties above 700,000 in the detached market, you're not as much in a rush anymore. Still, there are properties that are selling in a couple days, depending on how good a condition the property is in. But very soon you'll have other properties to look at. So it's not as competitive or not as aggressive. But if you're looking sub 700,000, then yes, you'll be possibly facing a lot of competition. As far as semi-detached goes, following a significant gain last month, new listings pulled back in June relative to sales, causing a sales to new listings ratio to rise to 76%. Did not prevent some gains in the inventory levels. Inventory levels remained nearly half of those we traditionally see in June. So again, the previous one was 45, this is half. With just over 1 month of supply, we continue to see an upward pressure on home prices. So semi-detaches are actually very hard to come by. There's not a lot of people selling them, and if they are, the prices are just so high now that it doesn't make sense to a lot of people, and then they either move down to a row townhouse or they decide to put some additional money in and go for a detached. So row townhouses slowed down in June relative to the high levels that we achieved over the past 2 years. A higher pullback in sales compared to new listings caused the sales to new listings to actually fall to 75%. So the lowest June level actually reported since 2021. And sales to new listings, for those of you who don't know, is just how much units was sold versus how many new units came on the market. Conditions remain exceptionally tight with 1 month of supply, especially for properties priced below 600,000. So again, we're seeing the same narrative. So while the bigger pictures say that the inventory is increasing, sales are dropping, but the problem is sub 600,000 for row townhouses, there's just not a whole lot available. As far as apartments go, the decline in sales was primarily due to the significant pullback for units priced below 300,000. Limited supply choices for lower priced products is preventing stronger sales. So the sales are dropping because while units are coming in those most expensive parts of the market, affordable part of the market, just because we don't have enough for the buyers are now reluctant and just waiting on the sidelines. Year-to-date apartment sales are up by 13% and are at record high levels. So new listings continue to rise relative to sales, causing the sales to new listing ratio to fall and drive further inventory gains. Taking a quick look at where exactly the sales happen as far as different regions across Calgary, you can see the sales trends are lower than the same time last year, as we pointed out, but it's still strong against the longer term averages if you look at the past decade. Compared to May, where we see the drops really were, is in city center, southeast, and south. So those are the 3 points where people pull back as far as just month over month comparison. The rest of the market seems to be performing pretty much at par with last month. So as far as the total inventory goes, how does that match up as far as across different parts of Calgary? So you can see here, looking across a decade, obviously our inventory is still extremely low and we're very tight. Then what is the difference now as compared to last year? Because inventory is higher than where we were last year. Then why are we having those issues? Because right over here, as you can see, when we look at the inventory for this month, the red lines I have drawn in there is where we were at just a month ago. So when you look at the inventory increases, obviously you can see almost no change between that 500,000 to 600,000 range. And my suspicion is that's where all the townhouses were being absorbed, so there's no accumulation of inventory. But as far as the lower ranges, so you can see the apartment side, between 300,000 to 500,000, we are building some inventory. And then on the upper side, 699 and plus, or even 600 and plus, we are building up inventory. But those are not the affordable parts of the market. So month over month, even though these two ranges are increasing, the issue is that we are hitting a cap with the lower side of the market. Versus if you were to compare this with the same time last year, obviously you can see the difference where we had significantly more inventory actually on the lower side and the market was far more affordable. So overall, we actually have more properties on the market now, but it's just not enough because it's not matching up to what the buyers are looking for. And so going forward, I'm not entirely sure this is a problem that's going to be resolved. This sets a new standard for the market now going forward, and we will have a different set of buyers moving for different reasons, and affordability is not just the only one. So now comparing this to sales, it's very clear where the issue actually lies. To prove the point of where the inventory coming on is not enough, is sales dropping in the exact ranges that we saw an influx of inventory. So the red lines are the amount of sales that happened last month. And obviously you can see that those are the exact same areas that inventory went up. So even though inventory went up in those price ranges, those are also the exact same price ranges that the sales went down. So while you can say that obviously because the sales didn't happen, that leads to the buildup of inventory, but the buildup of inventory is significantly higher than the amount of sales changes. And so obviously you can tell the sales as far as 500 to 600 is the same as last month. And so that's sort of the hottest part of the market right now because it's the most desirable in terms of the maximum return on value for the dollar spent. How does this reflect on months of supply? And this is a very good graph to just look at in terms of how competitive different areas for different property types are. So inventory has actually grown up for all areas in detached. Everything is above 1 now. That's the major change. As far as apartments go, there's a small increase in city center and a big increase in north from 0.8, and in east we went up from 0.75. As far as semi-detached goes, city center went up from 1.55, and north also saw a recovery from the low of 0.45. City center saw an increase from 1.1 for row townhouses, and most areas went from being around 0.5 to 1 plus, so all of them have pretty much doubled. The other graph that is extremely helpful for buyers is to understand the benchmark prices across different areas. So there's nothing really to explain here, but feel free to pause to get an idea of how much you're expected to pay depending on what property and which area you want to look at. So for example, if you want to go after the detached properties but all you can afford is 600,000, then potentially you're looking at either northeast or east. For the sellers out there, how are you performing and how are your properties doing depending on which area you're looking at? Here you can see the detached apartment, semi-detached row, and total depending on different areas. So as you can see, mostly east is the most gains, followed by northeast very closely. And that is just because they were the cheapest properties a year ago, and so they're growing the fastest compared to the rest of Calgary. But apart from that, you can clearly see on the different areas how your properties are performing and what percentage of returns you can expect over the last 1 year. So to sum up the whole point about sales and how sales is different this year and how the inventory is different, obviously here now you can see June 2023 compared to June 2024, how different the numbers are. As far as the 150,000 to 200,000 range goes, last June we had 103 sales versus now we only have 18. And the same goes for 200 to 250. We had extremely high amount of sales, and then even 250 to 299. Still pretty close this year, but still $100,000, 100 sales difference. So the real sales are moved up by almost 3 brackets. And that is not just because people are not listing their properties. The narrative is that people on the low price ranges are not listing their properties, and that's why there's no sales, and that's lowering the sales for the lower price range. The fact of the matter is, price has significantly changed across all of Calgary over the past 1 year. And so even if as people are listing their property, they're no longer going to be listing at those price ranges. Those price ranges don't exist. I wouldn't be surprised if next year that 18, 70, and 180 turns to a 5, 10, and maybe 30. And that's what's happening. The entire market has moved up and the buyers need to adjust, and it's a different dynamic out there. Finally, taking a look at the sales versus inventory versus the benchmark price movement. And this graph paints it very well. As you can see, back in March and April, we had serious problems with inventory where the sales were eating up into existing inventory plus taking on all the new listings. But as far as May, we managed to catch up, and June has now seen a much larger spread between the inventory and the sales. And so this should result in a more sideways movement with small gains month over month for the next couple months. And that is as we enter the summer market. Once we head into fall, potentially foresee a slight uptick again as people try to get into the market quickly before winter, because nobody wants to move during the winter months. But again, that depends on how high the prices reach by then, which shouldn't be too different from where we are now. But I don't foresee the prices dropping. At most, maybe a month of sideways movement, because once we see the interest rate drops, we should see more buyers come off the sidelines, although that is not necessarily a good decision to be waiting around for interest rates. But that's just what a lot of buyers are doing right now. And so that should stimulate things a little bit as affordability opens up. But I don't foresee that having a major impact on the price shift, because now the decision points are a little bit different than just affordability. And as the unemployment index in Calgary starts ticking up, more and more people are potentially not able to find the employment opportunities that they thought they can have when they move here, which then further discourages people from taking that risk and moving or trying to find a job before they are actually able to move. There's still going to be a lot of upward pressure as we enter into next year. And then I think next year we will actually hit price points where we will be a very different market. But as far as overall affordability goes, as other markets in Calgary start recovering, because right now Toronto, Vancouver, they are all seeing a very different market than Calgary. As they start recovering and the unaffordability goes down there, the affordability then relatively goes up in Calgary. And so we would see an influx of buyers, but it's just a different dynamic right now than a pure statement of the only way is up. So thank you guys for tuning in. Hopefully you found this extremely useful. Again, this is a very data-oriented video, a lot of graphs, a lot of charts. I will be making a lot more simplified version of this. And if you're interested in just the summary and to understand overall where my predictions are, what I think that is going to happen in the Calgary real estate market, and we will also talk about a few other data points in the market about unemployment and the different industries and things like that, and what the government is doing. Definitely stay tuned, and I will see you guys in that video. Make sure you subscribe so you get notified when I release my video next, and show me your support by dropping a like on this video so that I'm able to help more people like you. That's just how the YouTube algorithm works. Appreciate your support. Until next video, take care.